Hi, I'm Ollie. Today I'm going to be talking about Dubai property investment and the opportunity that we see for investors there. So first of all, I'll give a brief intro to our business. I'll then chat about why Dubai is so popular with investors right now. We'll then move on to a few developer specifics and then on to a couple of sites where we see some really good opportunities right now. So just quickly, a little bit about us. So you can see some figures here. Now, ultimately, we help investors build residential investment portfolios. Our business has been going 10 years. We've invested into 25 different towns and cities around the UK, as you can see here, got over 400 properties under management. But in terms of today's presentation, the important figure obviously here. So whilst we've been going for 10 years as a business, we first started looking at Dubai about 12 to 15 months ago. And after multiple trips, we're now at a point where we're comfortable with the investment landscape there. And of course, excited to share a few opportunities. So this is certainly a long-term vision for us. We incorporated our business last year in 2024. And we're now partnered with multiple developers. We've met a lot of agents, brokers, everything that we need in order to understand the investment landscape there, which I will move on to. So firstly, why Dubai? Now, there's many reasons for why people look at Dubai from an investment perspective or why they might want to move there. I've taken a few headline pieces here that I think are certainly big motivating factors. So first of all, of course, its location. The fact of where it just sits geographically, it says here situated at the intersection of Europe, Asia, and Africa, and essentially its proximity to major markets. So this over here, if I just move this here, you can see this is a statistic comparing 2023 to 24 in terms of the total visitors to Dubai, going from 15.37 million up to 16.79 million in 2024. And that figure is continuing to grow, which, as I say, is for a few reasons. But coming back over this side, the tax element is, of course, a very big one from an investor's perspective. There is no capital gains tax, and there's also no tax on income. So, of course, if you're looking at buying and selling property, you won't pay any tax on the uplift. And then throughout the whole duration that you hold the property, you're not going to be paying any tax on income. So that's, of course, very attractive. Another big point is the golden visa. So we have a partner company that we work with that can help with the setup and all of that. But from the investment side, in order to qualify for a golden visa, then if you purchase a property in excess of from 2 million dirhams, which is about £440,000, and that can be a complete property, it can even be off plan once you've paid a certain amount, as noted down here, then you can qualify for a golden visa, giving you and your family the right to live, work, and study in the UAE. This next point, quality of life, lifestyle, I think one of the biggest things that you often hear about Dubai is how safe it is. And with various things going on globally at the moment, geopolitically, that does become very attractive for people from certain countries, but ultimately just the lifestyle as well. Good weather, good public services and infrastructure. So that is certainly attracting people. And then finally, of course, the level of returns down here. So from both a yield perspective in terms of monthly rent, but also the capital growth opportunities are very high. Now, one of the questions that we asked ourselves when we started looking at Dubai for investment is, I think, something that a lot of people also mention, which is the market saturated? Have we topped? Because people are hearing about all of these gains and they think, how much longer can it go on? Now, I think a really, really important statistic to look at is exactly what's on the screen here, and that is looking at the population growth. So coming over here, you can see the recorded population growth between December 23 and December 24 was 4.66%, which equates to 170,000 people moving to Dubai in 2024, which is an average of just over 14,000 people a month. Now, that is obviously a very high number. And when you look at the residential completion, so the amount of houses or apartments that actually got delivered last year, it's around 38,500. So Dubai is actually really struggling to keep up with demand right now. So whilst there's lots of supply in the pipeline, the population growth is supporting that. And looking ahead over here, a little bit blocked here, but the city's population has been a consistent upwards trajectory. So projections right now suggest that by 2026, Dubai's population will surpass 4 million people. And then looking out even further, Dubai 2040, they're estimating 5.8 million people. So that is obviously suggesting that there is a lot more supply that is needed in order to keep up with demand. And just going straight back to, when you're looking at any investment, you want to make sure that there's lots of demand there. And at the moment, the figures are showing that there certainly is, and that is set to continue. So looking at the last 12 months in Dubai, you can see in this box here, sales transaction volumes, there are 181,000 sales last year, which was up 36% on the year before, coming to a total of 522 billion dirhams. Looking at house price growth, which is in this box here, you can see that house prices grew by 19.5% in 2024, or if you adjust for inflation, still a very high number at 15.83%. And it's worth noting that this growth actually followed further growth in 2023 of 20%. And then even going back to 2022, there was 9.5% growth. So it wasn't just one standout year. The trend is very much upwards at the moment. And then even looking at the rental inflation, you can see that had on average 21% year-on-year growth, which is about double what the UK did last year. So again, very impressive. Now, another question that we asked ourselves when entering this market is, it's great to see all those figures and that price growth, but actually what does exit look like? There's so many new properties coming onto the market. Is there a secondary market there? So if you do have investors that they want to buy, okay, they want to buy and hold long term, but if for any reason they need to sell, do they have that option? So digging into the secondary market and looking at these figures here, they're actually very, very healthy. So you can see there was actually an increase in sales of 21% last year in the secondary market. Volume was also up 14%, and even the average price per square foot increased by 12%. And I think that has got a few reasons, or there's a few contributing factors. And part of that is going back to the previous slide in terms of the population growth. A lot of people who are moving to Dubai, they're obviously not interested in buying, investing off plan. They need something ready to go now. So in order to keep up with that demand, people have got to buy in the secondary market so that they can actually buy in something that's complete and ready to go to live in now. So that doesn't really show any signs of selling. That doesn't really show any signs of slowing either, which is, of course, really good as well. Another really good data point to look at is this report here. So it's released every year by UBS Wealth Management, and it's called the Global Real Estate Bubble Index. So they look at lots of the major cities around the world and they assess the bubble risk. So you can see highlighted in this circle here, Dubai is at a moderate level. But when you compare that to lots of other major cities, it's certainly not towards the elevated risk that you see in other places like you can see Los Angeles here, Toronto, Geneva, places like Miami, Zurich, and Tokyo. They're at a high risk of bubble. Those other ones I mentioned are elevated, but Dubai is really kind of sitting in the mix of the major cities. It's okay, slightly higher than Munich, lower than Frankfurt or Hong Kong or Sydney, sort of on par with Tel Aviv. And actually, if I move this here, you can actually see the graph just down there to the right. This is showing house price growth last year. Dubai is obviously right at the top of that. We saw in a previous slide, and this is adjusted for inflation, 15.8% on average house price growth, yet still it's sat here, grey, moderate, kind of sitting in amongst the major cities around the world. So certainly not an elevated risk that you can see in other cities right now. And then looking forward, now there's a lot of data on this page, which perhaps would be worth pausing and reading through. I won't go through all of the points individually, but looking forward for Dubai and what the trajectory looks like, another thing to look at is obviously the policies in place. A really key one is the Dubai Economic Agenda, or shortened to D33, which was announced in January 2023. And this essentially is an agenda with some points laid out detailing how they plan to double the size of Dubai's economy over the next decade. And ultimately, you can just see in some of the figures the amount of inward investment in Dubai at the moment, both from Dubai government, but also external investors. There's a huge amount of investment into Dubai. So that's really, really positive. And actually, many of these initiatives, because they were launched over a year ago or nearly 2 years ago now, a lot of these are well underway, which of course is really positive and gives us a lot of confidence in what Dubai, not just what Dubai looks like now, but what it will look like 10 years from now. So another really important point is, of course, investor protection and what measures are in place to protect investors. And we get a lot of confidence from this when there's a lot of detail out there, actually. And again, I won't go through all of these points individually, but there's two regulatory departments. There's the Dubai Land Department, which is the regulatory authority overseeing the real estate sector as a whole, but RERA, so the Real Estate Regulatory Agency, that is a subsidiary of the DLD, and that oversees the property market. Whilst RERA has got a big reach across the market in general, I think one of the most important things to look at is this point here. So RERA approves and regulates escrow accounts for off-plan developments. Obviously, off-plan investment is really attractive for investors, has been in the past, is right now, and will be in the future. And the government of Dubai have put in a lot of work to make sure that investors are protected. And one of the key points here is the escrow accounts. So RERA oversee them, and ultimately it's to give investors security. So money is held securely by a neutral third party, referred to as an escrow agent. So when you send your money to a developer, that is actually being held by a neutral third party to make sure your money is safe. And RERA actually oversee the development. So the developer essentially has to hit certain milestones before other funds can be released. If they don't hit the milestones, then obviously money can't be released and developers can actually get fined. So if they are going long past dates where they said they would complete certain elements of the build, then they can actually be fined. So developers are, of course, fully incentivized to give investors that security and transparency, but also with their build program to make sure that they are building on time. And then all of the transactions that take place throughout the build, this is all signed off by the escrow trustee. So there really is little to no chance of default from the developer or investors losing their money. So the next point here, coming on to who to actually buy with, I think the difficulty with Dubai is there is so much noise. There's lots of developers, there's lots of projects. It's very difficult to actually sift through all of that and understand where the good opportunities are. And for us, where we've ended up, are two developers here, most will probably recognize. And actually just to run through these points that I've got in the top left, what makes us attracted to work with a certain developer or like their investments? Firstly, I would say the biggest point is always that flight to quality approach. We have the same method in the UK, and I don't think that changes wherever you go. If you have a flight to quality approach, then that is always going to give you the best chance for success over the long term. Obviously, reputable developers, the track record of those developers. So what have they actually delivered? Have they completed on time? And then ultimately, where are they building? Are they targeting prime areas? So those are really big points for us. And that has lended itself for us to looking at these two developers. So Shoba and Amar. Now, if you've been to Dubai before, you will have certainly seen Amar, probably, if not the most well-known developer. They built the Burj Khalifa, tallest building in the world. They built many of the major neighborhoods or areas throughout Dubai. So there's Dubai Marina, you've got Emirates Hills, Arabian Ranches. So lots of very well-known established communities. A lot of that has been built by Amar. And then looking at Shoba, also a very established company. They were established back in 1995. Also multinational company, completed on lots of products. Lots of projects. And actually a really interesting point about Shoba is they are a backward integrated company. And what that means is they own their whole supply chain. And that makes a really, really big difference in terms of assuring quality, but also build schedules. And actually with Shoba, when they've given their target completion dates on a few of their projects, they've actually completed early. So one of their projects recently, they completed 7 months early, which is pretty much unheard of anywhere else in the world. But of course, that's a really big tick for the developer and one of the reasons that we really like what they do. So now on to some project specifics. So Senior Islands is a development by Shoba, located in Al Quwain, as you can see here. The next phase to complete is going to be in Q3 2028. You can see the entry point here. So to cover off that first, that is obviously a very, very good entry point. So one bed's from £229,000. You can see down here, two beds from 340,000. There's options for 3 beds, 4 bed, 5 bed villas. And ultimately the story here is that there are going to be lots of beachfront residences. So that's one first point. Beachfront residences in Dubai do very, very well. So if we can get into that type of location at a low entry point, then that is a really good place to start. But ultimately, the story here is more than that. It's about what is to come in the surrounding areas. So Senior Islands itself is on a natural island. So if you compared that to, the Palm or Palm Jebel Ali, those are man-made islands, whereas this is a natural island, which has various benefits. One are actually just the quality of the water. So you don't get turquoise waters around the man-made islands because there's constant dredging, constant sand and rock being moved. Whereas on the man-made island like this, Senior Islands, you do get that. So that is definitely a USP. One of the other really notable points is, as I said, what's going on in the surrounding area. So you can see this point down here. It's 10 minutes from Al Marjan Island, which is part of Ras Al Khaimah. And that is where the Wynn Casino will open in 2027. So build is obviously well underway. And this is going to be the first casino in the UAE. So there is lots of hype. There's lots of stories around it. There's hotels who have already moved into the area, ready to benefit from the additional tourism that it's going to bring to the local area. And ultimately, Senior is going to be more of a private island, perhaps a more family-oriented community that is going to be set to benefit from all of the tourism that comes from the Wynn Casino and everything that gets built around it, the various infrastructure projects and everything that's coming in. A few other points, amenities, it sort of goes without saying. A lot of the good projects in Dubai come with very, very good amenities. So this will, of course, have private beaches, with direct access, various water activities. There's going to be a golf course, swimming pools, health and fitness club, and then everything else, that comes with that: shopping mall, restaurants, retail outlets. So it's going to be an area, sort of a self-contained area in itself, whilst only being 10, 15 minutes down the road from Al Marjan and everything that's going on there at a much lower entry point. So if you look at entry points for like a 1 bed on Al Marjan, you're going to be around about 2.1 million dirhams, where obviously we're coming in here. Well, I've got the pounds figure, but that's about 1.4 million dirhams. So at a significantly lower price point. One other point I think that's worth mentioning is the development here on Senior Islands is a 50-50 venture between the Al Quwain government and Shoba. So from a risk perspective, although Shoba have got their full track record that we're really confident with, the fact that they are on a 50-50 JV with Al Quwain government, that of course does give added security. And then just looking over here, so the level of returns. So forecast yields are looking at about 10% net. That's when trying to compare it to other sort of beachfront residences throughout Dubai. Now, this very much will be more of a short let play. At least initially, we don't see this as a long-term play in terms of like an AS2 that we have here, tenant going in and signing up for 1 or 2 years. Where this is going to do really well is from a short let perspective. And then also just the capital appreciation. Of course, any project in Dubai, it really is about the capital appreciation play, because particularly like this, when you're buying into a new area of Dubai, then buying and holding this is where you're going to do best. Now, Shoba think that just over the course of the build, so until we get out to completion in Q3 2028, they're expecting about 60% capital appreciation throughout the course of the build. So from reserving today, parking your money, you can see the flexible payment plans that they have here, which is about a 60-40 split. By the time you get to completion, they are expecting a 60% uplift on the price paid, which is, of course, very, very strong. Now, I won't go through all of the different, there's various interactives that we have access to where you can sort of go around the site. But you can, this is just another view of Senior Islands here. You can see all of sort of the beachfront residences, but it's going to be amazing. Construction's well underway, and it is going to give that sort of private island feel. Now, on to another Shoba site that we really like is Heartland 2, our city, which is essentially a very established area. It's a prime area of Dubai, very close to the Burj, Dubai Mall, downtown, DIFC, Business Bay. Is the type of area that when we travel to Dubai for business, this is typically where we would base ourselves. So on this side of the spectrum, whilst there is definitely still an opportunity for short lets in this type of location, it's also, it certainly lends itself to more sort of long-term tenants as well. Over here, forecast yields about 7 to 8% net from a AST or long-term tenancy perspective. Also expected some very strong capital appreciation over the course of the build. You can see next completion down here, December 2027. I think with a project like this, it's already a very established area. So you perhaps wouldn't expect the growth that you might see with something like Senior. However, I think looking at the past and what has already been achieved, Shoba are expecting a 40% capital appreciation over the build. So this is Heartland 2. Shoba also built Heartland, it's not called Heartland 1, but Heartland, that was a really, really successful project that they first released back in 2014. Site sold really well, performed very well, so much so that they actually doubled the size of Heartland 1. So in 20 to completion, and they have seen about an 80% uplift in price over the last 3 years. Now, as the area has got more and more established, we wouldn't expect that same level of return, which why Shoba saying that they expect perhaps 40% growth over this build cycle, I think is reasonable looking at what has already been achieved in the area. And as usual, you know, with any sort of Shoba scheme, you get very, very good amenities, as you can see down here. The opportunity for investors, you know, it's perhaps a little bit more de-risked than something like Senior. Whilst we've already chatted through that and we think that's a really good opportunity, going into something like this is probably a little bit lower on the risk cycle because it's already a prime established area. And one thing that Shoba really tried to make clear is this is the second closest master community to the DIFC and Business Bay. The first closest is Heartland 1. This is going to be the second. And what they mean by master community is everything that is going into the surrounding area. So there's going to be, or there already is, you know, grocery shopping, there is hospitals, schools. So it's a proper community. So whilst you can go into areas like Business Bay and DIFC, looking at developers like Bengati, often those are standalone blocks. They don't build around the blocks and build the level of community that Shoba really commit to. So that's something that we really like about this scheme. So now moving on to an Emaar scheme. This one's called Hills Edge in Dubai Hills. You can see the entry point here in terms of pricing is a little bit higher. This is also in MBR city, so ignore this. This is actually an MBR city, so similar area, 12 minutes to downtown Dubai, 15 minutes to the marina, good proximity to major highways, easy commuting. Of course, some amazing amenities, as you will get with any Emaar scheme. They really do build world-class communities. You know, you've got championship golf course, you've got the schools, you've got 1.4 million square meters of park and some nice green space, which is also, which is always really appreciated in places like Dubai, and always do well from an investment perspective. But ultimately, again, you know, this is another established high demand market. And where there is a lot of opportunity here is there is actually very, very limited availability in Dubai Hills. Most of it's already sold out. There's only a few final releases to come, and this is one of them. And actually, even looking at the data in terms of how Dubai Hills is performing at the moment, you can see that complete properties are trading at a premium to off plan because so many people want to move there and live there now. So again, that bodes really well when you've only got a few more schemes to come in the area. Something like Hills Edge, we really like the look of that. And then looking at a yield perspective, so you can see the entry point. Yield's probably going to be around the sort of 7 to 8% level. Again, we would still expect strong capital appreciation. With Amar, I mean, one thing to bear in mind is actually, even if that is something that you want to buy, you can't always buy it because it sells out sometimes within hours. So you will get releases and you will have people queuing, long queues to actually try and secure a unit, and they often can't. So you do have to act pretty quickly, but again, that kind of gives the assurance in terms of showing how in demand this type of product is, which is because of everything that they build, the quality of the build and the communities that they build around them. And then you can see here, so January 2029 is kind of what we're planning for. And obviously, once these are sold out, there might be a couple of other schemes, and then you're done. So again, I think there's lots of opportunity in something like this. This is just a map showing exactly where it is, Dubai Hills. So you can see its proximity to all the major attractions. You've got Burj Khalifa here, you've got the Palm, Dubai Marina, you've got Dubai International Airport, Dubai Creek. So it's right in the mix in a very, very prime area in Dubai. And then finally, one other Amar scheme that we really like is this one. So it's called Expo Living, or the next phase is Terra Heights. So as you can see sort of from the name, this is in Expo City. Expo City ultimately goes back to Expo 2020, a really, really successful event, and certainly established Dubai on the world map. Expo City and all of the infrastructure is kind of its legacy. So it is essentially a sustainable urban district. And often what you see sometimes throughout Dubai is you get some nice projects, but the infrastructure isn't quite in place to support it. Whereas something like this, because of all the infrastructure that had to go in place for the expo, all of the developments in this area are really benefiting from that. So you've got the attractions there, you've got the good links, the road links, the metro links. So this is a place that's really, really popular from both a long-term rental perspective, but also from a short-let perspective. So particularly for an Amar scheme, getting in at this sort of level, 1.5 million dirhams, or about £328,000, is a really good level to get in at. And we are expecting very strong capital appreciation again on this. Yields about 7 to 8% net. To be aware of outside of Expo City itself is where that is actually located geographically in Dubai, which is in Dubai South. Now, a lot of investment is starting to move that way. In and around Marina or downtown, it's getting very expensive, running out of space. And now developers are starting to target Dubai South. And they're targeting Dubai South because of everything that is to come. There's the infrastructure, the roads that are constantly being improved, but one of the really big ones is Al Maktoum Airport, which is noted in this bullet point down here. It's going to be the world's largest airport. It's going to create 1.5 million new jobs for the community. And that is a joint venture between Emaar and the Dubai World Trade Center. So a significant amount of investment pouring into the local area that Dubai South is primed to benefit from. And, looking at the location here, which I've already mentioned, much more affordable entry point, as I've already noted up here, versus if you're looking at trying to get into central Dubai. So again, from an investment perspective, getting in early, parking your money, waiting for completion in 2029, and everything that's going to be in place by the time that we get to that point, I think it's a really exciting opportunity. And I think going with Amar, where they're not going to just put a block in, they're going to really invest in building a nice residential community, all of the amenities, again, that you typically see with any good developer, everything they're going to put into place is going to be a really attractive place to live, both from a long-term perspective, but even from a short-term perspective, which is great for investors because it gives a couple of opportunities. is here to show where Expo Living is in Dubai South. So you can see the airport, the scale of the airport that's going in there. And then you can see its connections, the red metro link connecting you to downtown Dubai. You've got Dubai Marina up here, the Palm. So it really is a new and exciting area that is getting introduced to Dubai and where we see a lot of opportunity for investors. For further detail, there is plenty more information that we can provide that I couldn't put in one presentation. So if you are interested, then please do get in touch with one of the team and we can share additional info. Thanks very much.